each session passes and you are more and more closer to become a successful and, of course, professional trader. During this journey, how to choose the right tools in the right place and right time in order to become artist in the field of trading. Don't get me wrong when I always telling you do this, because all the sessions are coming right after each other and they are mandatory to be watched before you watch the next session. If you haven't watched my previous videos, this video is not for you, so please go check them out first. Previous sessions we talked about different stuff like support and resistance levels, chart patterns, candlestick patterns, and we talked a lot about them. Then we had a summary session. Previous session was about the first session was of course about the technical indicators, and we talked about moving averages. This session I want to talk about relative strength index, or RSI. It is of course another really powerful technical analysis indicator which the traders are using it in order to follow the price movements. RSI, or as the full name represents, relative strength index, is used to measure the securities movement and price action. It was developed by J. Wallace Wilder back in 1978 and has become one of the most popular trading indicators used by traders. As for today, RSI oscillates between 0 to 100 level, and it is calculated based on gains and losses of a specific stock, currency, or asset over a given time. Well, first let's find the RSI, the easiest part. Simply, we have to go to this section, the indicator section, but before that, if you don't know how to work with TradingView platform and how does it work, previously I made a complete dedicated session for it, a complete video for it. Go check it out. There's a link down in the description. So we're going to the indicators section and we simply write down RSI, and it's here, relative strength index. As you can see, just like the previous session, like moving averages, there are tons of them out there, written by different programmers / traders just like us. There are a couple of them here, but what we need is this one, RSI, Relative Strength Index. Let's make it a favorite and click on it, bring it on our chart. You can see it's coming down here. For a moment, I want to make it maximized as a maximized pane like this, and let's make it full screen and go to the settings and talk more about it. The RSI calculation involves taking the average gains and losses of the stock, security, or an asset over a set period of time. The default time period used by most traders, including I myself, is 14 candles. The formula for calculating RSI is just like this. Let me write it down for you. Okay, so this is the formula, and where RS stands for the average gain of the stock, security, or an asset over the specified period divided by the average loss of the stock, security, or asset over the same period. So what does an RSI really tells us? It tells us whether an asset or a stock, or let's say a security, is overbought or oversold. A stock, security, or asset is considered overbought when it is above level of 70, indicating that it is close to the moment that it may has a correction. And by correction I mean it may reverse. Conversely, a stock, security, or asset is considered oversold when it is beneath the level of 30. Somehow we can say when we are close to support and resistance levels, it can indicate for us that and giving us that signal, okay, I am oversold or overbought. So when we are reaching an overbought area, it means we are close to a resistance level, and when we are close to a support level, we are going for oversold area below the level of 30. Let's go to the chart and see how it works.
Let's go to the setting again. You can here change the colors. I really don't like the default colors. I highly recommend to leave all the settings, as I told you before for the beginning, leave all the settings to their defaults, but sometimes you can just change the colors in the beginning. Do not touch lots of things. So you can change the colors and make them a little bit more visible to your eyes. So as I told you before, the RSI oscillates in between the level of 0 to 100. Our key levels are level 30 here and level 70 here. So whenever the price is approaching this area and going above it, I mean the 70 zone and 30 zone, when it's going above 70 zone, it means it is overbought and we may have a reversal of the price. It means somehow it's close to a rejection zone, let's say resistance zone. The opposite is the same. When the price is going beneath this 30 level, we can expect that the price is close to support level, the key level. It may reverse from there. Let's bring the candles up and see if it is working exactly like this or not. In this case, we had support level, which the price had a reaction to, and you can see there was a beautiful hammer happened here, another hammer here. We have some reversal signals, and in here the RSI is telling us, okay, I am oversold. Let me change the color to green in order to make it as a support area. And then sometimes it is not always working like that, so you need to combine it with the other things. But sometimes, for example, in this case here, you can see it is overbought, and we are expecting for the price to go down, but it didn't go down. It just went down a little bit. It was a correction, and then the price went up and up and up. In order to know if they are valid signals or not, there are tons of things that we have to check, but due to the fact this is a dedicated session to only RSI, I want to only talk about RSI. Later on, when I'm going to finish the most popular technical analysis indicators, then I will have some summary sections and talking about how we can combine these ideas and techniques to come up with some strategies. But just talking about RSI, so you cannot only rely on this overbought or oversold territories. These are only for having some confirmation. How can we avoid false signals? There is a way, there is more reliable technique which we can combine with the other data that we have from previous sessions, like correctly finding the support and resistance areas. So in this case, you have to go watch that video if you haven't watched that yet, but I don't want to get into that now because that's a complete session. I made a dedicated video for that. But here we have a resistance level, and we can see that the price made a higher high. It was one high, it is a higher high. And then when you take a look at here, so let me just mark it like this. When you look down here at RSI, you can see a higher low. This is the reason that we call it a divergence, a negative divergence, and vice versa. A positive divergence is happening on a support level when the price tends to go up. But here in this case, when you go and zoom on it, you can see, yeah, we have lots of good signals, like a strong engulfing here, plus our divergence, plus our resistance level, and plus lots of other things which we can rely on as strong signals that the price tends to go down, and yet went down to our support level. Let me change the color to green. It was a pretty nice trade. If we took this trade like this, it was, oh my god, 32% with the leverage of 10x. If you don't know what all this means, this is the reason that I'm asking you always in the beginning of each session, go watch the previous videos one by one, because you have to know all the things. All these sessions are connected like chains to each other. It was a pretty nice trade. Let me find another example. So here's a really nice example for a positive divergence in RSI. So this is our support level, and then you can see that the price made a lower low like this. So this is one low, another low, a lower low. Let me mark that like this. But the divergence happened here in RSI, and the RSI made a higher low. So it means that the name is telling us relative strength index. It means that the sellers are losing their strength and the buyers are coming trading in. And what is our trigger point here to enter a really nice trade? This beautiful engulfing and in the same time 3 white soldiers. One strong double candlestick pattern and one strong triple candlestick pattern is telling us that, hey, I'm going up, and yeah, you can take that trade. And it was our resistance level up here. And if I just change the color to red, so if we took this trade here and our stop loss here and going all the way up to here, it was like, oh my god, almost 40% of profit with leverage of 10x. And then exactly right after that, we had another beautiful signal which told us that the price tends to go down. Here is a higher high, let me mark it like this, but in the RSI we have a higher low, another divergence, and boom, engulfing. Beautiful strong engulfing happened here. And before that we have shooting star here. So we have this short trade here, stop loss here, and target point here. Did it hit our target? Yes, it did. It took some time, but it did. It did beautifully in this case, and it was a nice trade. Another 31% with 10x leverage, and oh my god, if you made these two trades, it was like almost 70% of profit in matter of hours, and it is crazy. But there is a problem with this technique. So what the problem is, if you take a look at here, we have two examples of two divergences happened. If you look at the RSI, there are two RSIs. In this technique, you can use two RSIs in the same time, but I don't want to get into that. It is just an example for the divergence did happen, but it didn't work. Why? Because again, like chart patterns, which we talked about previously, like candlestick patterns, like any other trading indicator or signal that we can get from the chart, they must happen on certain areas and points which are supply and demand zones or support or resistance areas. So if you do not determine and find them correctly, the signals that you find, they mean nothing, and they can make you lose a lot of money. So in this case here, we had, let me zoom in, we had beautiful divergence, so lower low, lower low, lower low, but here the RSI had 3 higher lows. We could wait for a really strong signal like an engulfing here, and the engulfing happened, so we could enter a trade here and take the profit. But here, as you can see, if let's imagine we didn't take this trade, wanted to take this trade, or we entered the market and the market was at this certain level, and we could see that higher lows happen, and here we have a beautiful divergence in RSI, but the price didn't go down. Why? Because it is not happening on a key level. It is not happening on supply or demand zones. In this case, because the price is going up and we are expecting for the price to bounce off and coming down, so it is not true resistance level. As you can read here, where there was a reversal like here, often there was a divergence, but a divergence like here does not cause a reversal. It just signals one might fall. So how can we just make sure that it's gonna happen? First things first, you have to determine support and resistance areas first. With any trading strategy that you want to choose in the future, which I'm gonna teach like tons of them to you, and it is you who's gonna choose which one is the best for you, and I'm gonna even help you with that too. But the first thing is like driving with your car. You're getting in, the first thing you're gonna do is fasten your seatbelts. So we have to find these, and in the upcoming sessions I'm going to combine these support and resistance levels with RSI, with moving averages, with different other trading indicators, and we're going to come up with really strong techniques. But here now you have to know that you cannot trade only with support and resistance areas, nor with only the candlestick patterns, chart patterns, or even a single technical analysis indicator. You have to have a perfect combination. Of course, there is not such thing as a perfect combination, but almost perfect combination which fits that type of the market and that specific pair that you're trading and that specific time period that you're trading in, and it's going to fit you the best, and it's gonna of course serve you the best.
So did you like the video until the moment? If you really like it, please hit the like button. Just like the previous things which I told you, like the chart patterns, candlestick patterns, and even the moving averages, you cannot only rely on RSI as a trading, or let's say single trading tool to take your trades. We have to combine it with other indicators and strategies and bring them all together at once, coming up with several trading strategies for different types of the market in order to make informed trading decisions. So there you have it. In the upcoming sessions, I will talk about the other popular trading indicators. And when I'm done telling all about the popular indicators, we're gonna have summary sessions and we're gonna have some almost trading strategies and coming up with some ideas how we can gather all the knowledge that we've gathered throughout this course up to the moment and combine them with together and see how they work on the real market. And we're gonna have some backtests on the market on different assets, different time frames. So don't go anywhere. Watch the videos carefully and take a pen and paper, take notes, and watch them carefully. Watch them as much as you can. One time is not enough. Believe me, watch them 1 time, 2 times, 3 times, 1,000 times until the moment that you get it. And if you don't get a specific point or you don't get it at all, just feel free to ask me in the comments below. I would be really happy to answer your questions. If you haven't subscribed to my channel, please do it right now. So you're going to be the first to be informed by turning the notification bell on when I'm uploading a new video. I'm uploading my videos each 2 days, so it's like a series coming up. You don't have to wait for next session so long, so it's going to be really compressed. Please share my videos with your friends who you really think they are keen to know about this messy world of trading, which I'm trying to do my best to make it as easy as a piece of cake. Thank you for watching. See you in the next one.